Hey guys, how's it going? It's Andy from Magoo Investing. Happy Thursday. Hopefully you can't hear my neighbor shredding on the guitar. I swear he usually plays on Tuesday nights from like 7 to 8 p.m. But for some reason today, right as I was getting ready to record, he decides to take a break from whatever he was doing and play the guitar. But I think it's quiet enough where you guys will not hear me. For people who didn't see yesterday's video, I talked about a potential Robinhood replacement for people that have been upset with how Robinhood has been treating their customers. And if you missed that video, I'll link that above right now. But in that video, I talked about this new app called Public and why I was a big fan of all the social features that they've implemented that makes investing a lot less lonely. And based off of that, I thought I had kind of been putting it off for a long time. So I've decided to create a Discord server. It's a server where you can interact with myself and other people who are investing in the stock market. And it's a great way to bounce ideas off of other people or just talk about the stock market if you don't have people in your life that are knowledgeable enough about the stock market that can answer your questions or just kind of give you some ideas of what to do next going forward with the stock market. So that'll be the top link in the description if you'd like to go join that. In today's video, we're going to be talking about women in power, and specifically because in 2021, we've seen a lot of changes to how things have been running, and a lot more women have been going into power than what we've been seeing in the past. For example, we just had the first woman VP. Janet Yellen became the first woman Treasury Secretary. We had the first woman to coach an NBA game, the first woman to referee a Super Bowl this weekend, and the first black woman to coach in the MLB. So we've seen a lot of strides in the right direction. And I remember when I first downloaded Robinhood, one of the things that they have is they categorize a bunch of different stocks. And one of the ones that you could search by was women CEOs. And so in today's video, I'm going to be talking about my favorite stocks to buy that have women CEOs. And when you look at it, out of the Fortune 500 companies, only 7.4% of them have women CEOs. So there's not that many of them, but I'm expecting we'll be seeing that changing in the upcoming decades, hopefully. And so, as I mentioned, I'm going to be talking about my 4 favorite stocks that have women CEOs. I'm going to be talking about these stocks and why I'm a big fan of them. And it's kind of funny because it does end up making a very balanced portfolio. Normally when I talk about stocks and I kind of categorize them together, they're usually pretty similar stocks. It's usually the same type of sector. But when I look at the stocks that I've included in this list, there's a pretty good variety that gives some diversity to your overall portfolio. We have stocks that are a part of the Becky portfolio, which is the kind of joke portfolio that includes a bunch of stocks that basic white girls would like that has outperformed the stock market for the past 5 years. You have stuff that I've included in my own innovative portfolio where I was trying to beat the ARK ETFs that have had incredible success in the past couple years. And I will mention that the ARK ETFs do have a woman CEO in Cathie Wood, and while it would be fun to include those into this list, I have talked about them in depth in recent videos, so I won't link that above right now if you want to hear my thoughts on the 5, soon to be 6 ARK ETFs. So before getting started, I do have to say that I'm not a licensed financial advisor, and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, really appreciate it if you hit the like and subscribe button, as it would help my channel out a lot. So the first stock, and probably the one that I think of when I think of women CEOs, is going to be with AMD with their CEO, Lisa Su. Currently, AMD is trading for $88, and it's down 4% on the year. Before GameStop was the darling of Wall Street bets, the 2 stocks that I thought of being synonymous with Wall Street bets was Tesla and AMD. Every time AMD beat earnings, its stock skyrocketed. I'd always see memes calling Lisa Su the queen of Wall Street bets, and then Elon Musk would be the king. So here's what I mean by skyrocketing. I remember getting started in the stock market in early 2018, and the stock was sitting between $10 and $15 going into the summer. And I've put an arrow on the 5-year chart where I first started paying attention pretty seriously to the overall stock market. So what happened to cause this massive spike within the next couple years? It's a mix of AMD doing well and its main competitors and Intel doing poorly. AMD had been a really tough company for a while, and then they started beating their expectations for their earnings and they started increasing their revenue significantly. The stock jumps for most of 2018, and a poor report at the end of the year pushes it down, and then it went into overdrive. It started beating expectations more, and it just continued to grow over time. Then Intel starts having problems with their 7nm chip, and this is a type of sector where competition is very important. This is a type of sector where when one company does well, it's usually to the detriment of the other companies. So when a stock that is the size of something like an Intel, which is the #1 chip maker based off of the number of sales that they have, when they start doing poorly, that's going to push up the other stocks. And that's part of the reason why AMD has done so well, because Intel has been doing so poorly recently. And why doesn't AMD have problems like Intel? One of the main reasons is because they outsource a lot of their manufacturing process to companies like Taiwan Semiconductor. This means that they don't have to worry about the production problems that Intel has been seeing with their 7nm chip, and it's allowed them to grow rapidly. Looking at chip makers by market cap, AMD is relatively small, being the 7th largest on that list. And in 2021, we've already been seeing some chip supply problems that has affected most of the chip companies and is starting to spill over to other sectors. One of the places that we've seen that the most is a lot of the automakers so far in 2021 have talked about the lack of chips being a huge problem for their supply chain, and the ability to push out their products is maybe going to be taking a hit because of that. So that's part of the reason why the company has seen a little bit of a slippage so far in 2021, being down 4%, which is not super serious, but compared to the trajectory that the company's had over the past 2 years, it's kind of surprising to see it down after the first month of the year. So looking forward, it's hard not to be bullish on a company like AMD based off of their track record for the past 2 years. In their last earnings report, they announced that they had revenue growth of 45% in 2020, and they have expected revenue growth of 37% in 2021. So that's pretty solid growth. It's not like what they've seen in 2020, but 37% for a well-established company like AMD is very impressive. They also have chips involved with the next-gen consoles with the Xbox Series X and the PS5 that has helped with the growth. And based off of the incredible growth in the past 5 years, I'm a big fan of AMD. Is it a little overextended right now? Sure, you could say that, but when you look at its main competitor, when I think of Nvidia and Intel, I think AMD is in a great spot. It is not the largest chip maker, but it's a stock that's had momentum on its side for the past couple years and has been a darling of places like Wall Street Bets for years. Next up is going to be the beauty company Ulta, ticker symbol ULTA, with its CEO Mary Dillon. Currently, Ulta is trading for $293, and it's up 2% on the year. This was a stock that I included in the Becky portfolio video, which talked about a bunch of these stocks that stereotypical white girls are a fan of, and how it's outperformed the overall stock market for the past 5 years on a pretty significant margin. Looking at the 5-year chart, it's been really choppy and all over the place. And with the 1-year chart, you can see how the stock recovered from the lockdowns and has done pretty well in the past year. From the earnings after the lockdown, Dillon said that their e-commerce sales exceeded their expectations, but these stores being closed definitely hurt them. This is a retail company first, and as a result, it makes sense why they had a pretty tough time during the beginning of the pandemic. This resulted in a surprise loss for their earnings that pushed the stock only down 3%. Usually whenever you see a company that reports a surprise loss, it's usually a huge hit to the company. But when I put up that 1-year chart again, based off of the incredible decrease in price over the previous weeks and months, it makes sense that it didn't push it down too much further, considering expectations were already pretty low. Putting up the revenue chart, you can see the slip in their growth after years of consistently increasing their revenue year over year. In their past 2 earnings reports, they have beat expectations, and I want to talk about the bull case for Ulta, because whenever I look at this company, I'm always really surprised. This is not a product I use, but I think it does potentially have a place in my portfolio. I've talked about why I might be considering to sell my Planet Fitness shares, and this might be something that I would consider to replace it with. So first off, I want to talk about the net income chart. This chart shows revenue at the top, net income in the middle, and the resulting net margin at the bottom. And what you can see is as they've been increasing their revenue over time, they've been increasing their net income as well. This has resulted in an increase in net margin. This is very impressive because you want to see a company increase in revenue, but you don't want that growth to hinder their margins. And when you see a company that can increase their revenue and increase their net margin at the same time, that's a very bullish case. Obviously, the past 3 quarters have not looked great because of the pandemic overall, but when I look at the growth over the past couple years, I think that's a very positive thing and one of the best bull cases I can see for this company. But I do think that the ultimate bull case comes from their loyalty program. When I talk about brand loyalty in the past couple videos, the stocks that I've mentioned have been stuff like Apple, Nike, Peloton. These are companies that when people get involved with them, they absolutely love their product and they usually stick with them for a long time. But I think Ulta does have a case of being included with them for the top companies when it comes to brand loyalty. Their rewards member numbers are up to 32 million, which, it's hard to put that into perspective, but when you look at it, those numbers and those users make up 95% of their overall sales, which is crazy to think about. So that just means that these people are signing up for their rewards, and when they sign up, they end up making up 95% of their total sales, which is a crazy number. And out of that 95% of their sales, 45% comes from their Diamond and Platinum members. Those are people that spend $500, and then the Diamond is $1,200 a year. So these are people that have signed up for the rewards program and spend a lot of money per year with Ulta, which is incredible to see. And when I see brand loyalty, I think that's the ultimate bull case for looking at a company that's trying to weather some tough times. That's why I've talked about why I considered buying into LULU and why I ended up buying into Nike, because brand loyalty is so important to me. And then the final bull case I could find is showing their relative success with e-commerce during the pandemic. While there was a drop in revenue over the past couple quarters, they did see 90% year-over-year growth when it comes to e-commerce. So while these stores being closed have definitely been a hit to the company, they have shown that they can still bring in revenue through their e-commerce channel. So overall, I'm a big fan of Ulta, and I think it's a great recovery play, and I'm considering adding it to my portfolio. Even though this isn't a product that I use, I think it does have a part of my portfolio, and based off of the bull cases I've laid out right here, I'm very close to pulling the trigger and buying in. So the next company on this list is going to be SFIX, ticker symbol SIFX, which is led by CEO Katrina Lake. So SFIX was a stock that I put into my innovative stock list when I was trying to create a portfolio of 10 different stocks that focus on innovation that could beat the ARK ETFs. Currently, SFIX is up 41% on the year and it's trading at $83. So for people that don't know, this is a service that puts together clothing and other apparel things based off of an algorithm that they have on their website, and it ships you the products, you try them on, and whatever you like, you keep, and whatever you don't like, you send back, and you only get charged for what you keep. And so I think this is a genius business model, especially for someone like myself that hates going shopping and trying on clothes. This makes the process a lot easier. I don't have the income to support something like this, but I think it's a genius business model, and that's the reason why I decided to put it onto my innovative stock list. They've seen pretty solid user growth in the past year, increasing at 10% up to 3.8 million customers, and those customers are made of people that have made a purchase on the website in the past year. While this company is relatively small, here's the one-year chart, and you can see the run that it's been on lately. And what's the cause of that run? It's a short squeeze. And so while this has not gotten as much publicity as something like a GameStop, this has been something that I had watched, and it was very interesting because this has been the normal situation for a short squeeze. It hasn't been a result of online trading communities talking about the stock and pushing up based off of momentum. This is the normal thing where this is a heavily shorted stock which had very high short interest. You have a very surprise beat when it comes to their earnings report, and they ended up posting a surprise profit. As a result, the stock price shoots up. A lot of people cover their shorts and pushes it up significantly. After that news from the earnings report, it was up between 30 and 40%, and it has continued to go on that run, as I mentioned, being up 41% on the year. So after a short squeeze, the question becomes, is this price level sustainable? And as of right now, I'm thinking potentially. There's always the possibility that people lock in profits. We did see the CEO sell some shares at the top, which, whenever an insider sells shares, it does not look great, but so far the company has been able to hold this elevated price level for a decently long time. It has shaved off some of the price from the recent highs, but I think it's possible for them to stay at this level. The thing that I look to answer the question of is the price sustainable has to do with the guidance for the next year, because while the earnings report from this past quarter has pushed the stock up, I want to see what the company is forecasting for the next year to kind of see if this was a one-off quarter or if it's going to be sustainable. And based off of the numbers that the company shared, they expect to see 20 to 25% revenue growth in fiscal 2021. So based off of those numbers, I think it's very possible this stock will continue to rise going into 2021, but there is the possibility that after the incredible run in the past 6 months, it could sell off a little bit as people end up taking their profits. So it's going to be interesting to watch. And while this is not a stock I would buy based on the discount, I love the premise of the company, and I think it's very innovative. That's why I put it on that innovative stock portfolio list. And it's a potential stock that I'll add to my portfolio during this year. Maybe if we get a pullback, maybe a miss on earnings, I would consider buying in. So I'm a big fan of SFIX. I just don't think this is a company that I'm willing to take a risk on right now. And then finally, we're going to be wrapping up with Duke Energy, ticker symbol DUK. That's led by CEO Lynn Good. Duke Energy is currently trading for $94, and it's up 3% on the year. I talked about Duke for the first time back in December when it was potentially going to be merging with Nextera Energy, ticker symbol NEE. At this point, I do own shares of Nextera, but this merger did not go through, but it put Duke Energy onto my radar of stocks to potentially talk about. Duke is a power company headquartered in North Carolina, and while they have normal energy parts of their business, I think the most exciting part and the only reason I would consider investing in them has to do with their outlook on clean energy for the next 20 plus years. They announced more than a year ago a long-term clean energy program. With this plan, they included a goal of having 40 gigawatts of renewable energy capacity by 2050 and to add more than 11,000 megawatts of energy storage by 2050. So when you hear 2050, that is a long way away. People aren't even sure if the news about the Apple car is worth even moving the stock price to this point because it's still a couple years away. For this, we're talking about 2050. But when you look at companies like Nextera that have done incredibly well at building up their renewable energy sources, Nextera currently has 14,000 megawatts of wind energy, and they've tripled their energy capacity in the past decade. So when I look at that level of growth, while I don't think they're going to be able to have that type of growth, I think maybe doubling in the next decade is very possible. Nextera has the benefit of size, being the largest energy company in the US, and while Duke is not that large, I think doubling their energy capacity in the upcoming decade is very possible. And their view going to 2050 makes me feel very bullish on them overall. This is not the most sexy company when it comes to their chart. I'll put that up right now for the past 5 years. It's not that great looking. It does have the benefit of having a better dividend than something like a Nextera, which is currently sitting at a 4.3% yield, but on a forward yield basis. So it does have some options. I like the long-term growth potential of the company. It is not a stock that I think is going to double in the next year, but it could be a potential stock to add to a relatively conservative portfolio that does have the potential of growth when it comes to their renewable energy portfolio in the next decade. While it's not my favorite for what I'm trying to do right now, their outlook on renewable energies makes me feel very bullish on the overall sector, and based off of my bullish thesis when it comes to the growth in renewable energy sources in the next 25 years, Duke Energy will likely benefit from that as well. So overall, those are my 4 stocks that I'm a fan of that have women CEOs. And I think at this point, we're definitely lacking. As I mentioned, 7.4% of the Fortune 500 companies have women CEOs. The number is going to have to rise in the upcoming years. So it's going to be interesting to see how long it takes for change to really be seen in that area. Let me know what you thought about this list, and let me know if there are any stocks that have women CEOs that I missed that you're a fan of. Thanks for watching this video. If you'd like to join my Discord, that will be the top link in the description. Thanks for watching. I will see you in the next video.